Welcome to the new weekly outlook for this week. We're going to start off with the fundamentals and then move on to the technical side. And today, the fundamental side is potentially going to be a little bit more shorter than the previous ones. The main things that have happened over the weekend that we're kind of following here is the German elections and then whatever is happening with the Russia-Ukraine war and US's parts in that with Trump. So starting off with some of the bigger news that we're going to see across headlines, this weekend has been that German conservatives have sealed the election, and now we're moving towards potential coalition talks. So I'm going to give you a quick summary. You can continue down into this article, kind of look it up on your own as well and read it. But a quick summary here is basically that the Conservative Party has won the elections and it's pushing for a coalition agreement by Easter with the Social Democratic Party, SPD. But Olaf Scholz has distanced himself from helping negotiate after he basically lost here. And investors overall, they're expecting a pro-market reform under this new administration and leadership aimed specifically at reviving Germany's stagnating industrial sector. So we know that Germany is a massive economy and a big contributor to the EU overall. That's why we really care for it. Germany's economy still is overall vulnerable due to China's slowdown and the U.S. trade tensions, especially after Trump's threat of a trade war, along with the unilateral peace talks that are happening with Russia. So these two things specifically can weigh on Germany's export-driven economy, and that's how it's really going to be impacting euro. So we're really trying to understand, how is all this news and Germany's part really going to be impacting euro? So if you're trading EJ or EU or anything like that, and right now, what we have overall is that Europe's defense situation is in a flux, and with the overall European Union is starting to prepare for reduced U.S. support for Ukraine, with understanding what is Trump's stance as he's talking to the Russian leader as well. What we saw when the markets opened up in Asian session was that equities were starting to see a short-term gain, especially in the industrial and defense sectors, as MERS is now seen to be pushing more for stronger military spending and have more business-friendly policies. So from an investor perspective, we're expecting that we're going to start to see more business friendly policies coming out from there and more military spending, and that those are going to be the specific sectors that are going to be pushing the equities in the EU zone. The euro overall also saw bullish momentum as the Asian session opened up, and it may continue in the near term, but we might potentially face some headwind there if the coalition talks continue to drag on, or if the transatlantic tensions, so the trade war and all of that tends to escalate. So right now, as investors, the eyes are on how quickly MERS can form a government and the policy direction that he's going to take with SPD. Continuing on to the next article here, that brings us right into this EU summit that we're going to see on March 6th. So it's quite short here, but real quickly, the main points here is that the EU is going to hold a special summit on March 6th to accelerate the military spending or the aid for Ukraine and potentially strengthen the defense efforts. So right now they're preparing a 20 billion euro military package for Ukraine with discussion on boosting defense spending. And because of that, the EU may also ease fiscal rules to allow greater defense spending. So that means higher government borrowing, impacting bond yields, and the fiscal policies across the EU. This is also going to potentially fuel the geopolitical uncertainty, especially as this news is coming at a time when Trump has been pushing for a quick peace deal with Russia, and this response from the EU could be seen as the EU potentially entertaining an independent and a more aggressive stance on the military support to Ukraine. And this, from an investor perspective when it comes to the markets, shows a heightened geopolitical risk that could strengthen safe haven assets like the US dollar or the Swiss franc, while still weighing heavily on the euro. And that takes us right into the following or the last news here, where Zelensky says that he would be ready to quit for sake of Ukraine peace. So he's willing to basically step down and trade his presidency if that means that Ukraine is going to get a spot in NATO's membership, which is just leading to more of the uncertainty that we're seeing on a global scale from a geopolitical perspective around Ukraine's political stability. So that's what we have when it comes to the macro fundamentals. When we're looking at economic data, this week is going to be quite easy compared to the last few weeks that we've had. So today we started off the Asian session with a bank holiday in Japan. Going into London session, you have some low impact news that's coming out. For the most part, not much happening in the New York session. As you can see, there's really no USD data points that are coming out. So I'm expecting this week to be a little bit slower and a lot more technical move rather than a fundamental or market sentiment driven moves. Going into Tuesday, you have FOMC members speaking, you have some, again, low impact news coming out. The more important thing is going to be the consumer confidence. So around that New York Stock Exchange open, 30 minutes after that, you have one high impact news point coming out. If you're trading the Aussie, you have CPI data that's coming out in Asian session. That's something to watch out for. Going into Wednesday, once again, quite slow. So you have the G20 meetings. You also have new home sales. You have crude oil inventories, things like that. You have one FOMC member speaking as well. And then going into Thursday, you have a little bit of more red folders. You have the prelim GDP unemployment claims that we get every single week, and then some more orange folders basically throughout the day. And then Friday is going to be one of the more important days of the week where you have the core PCE price index coming out. So this week, quite easy when it comes to economic data points. I'm expecting a lot more technical setups, so technical analysis heavy week instead of more fundamental or market sentiment driven, except for Friday when you have core PCE price index coming out. So that is on the fundamental side. Let's go ahead and move on to the technical side here. Starting off with some of the higher time frames. So on monthly, we have a nice bullish push up. And this month, we've already had a nice top wick rejection happening. The monthly candle is also bearish here, so we're going to mark off that level up top here. And then you also have that bottom wick rejection right here on the monthly candle, and it's sitting very nicely on this previous top wick rejection before we had a nice push up, and we kind of just hung around this area for quite some time. As we drop down to lower time frames, you can absolutely adjust these levels as well as you find fit, or pretty much keep them if they align across different time frames. That's further confirmation that this is a very important level that you're tapping into. So as you're looking for your trading opportunities, you're potentially not going to be looking for your quick trades as soon as price breaks this, and then you're looking for longer term trade opportunities. Rather, what this means is that if price is going to break past that, you need to wait for your further confirmation, break and retest, or whatever other confirmation that you look for to confirm that this broken support is now a new resistance if you're going to look for continued sells. Over here on the weekly time frame, we had a nice sell-off last week and closed right at that level that we had marked off from the weekly or the monthly time frame. And then this week already, we are starting to push up a bit of a gap up that has happened that shows you that bullish momentum that we're talking about from the fundamental perspective of equities getting that push, basically, and pricing that into the Asian session. So here, again, you want to be a little bit more careful. You want to give price enough room because it is the first session of the week. Give it enough room to wick around and kind of find its direction here. But if price breaks below this, we're waiting for our further confirmations of break and retest, especially from 4-hour daily timeframes, and then continuation down to take advantage of any seller's pressure that we might see here continuing from last week. If not, then you have potential buy opportunities that are setting up here as well. You identify those on the lower timeframes. So when you come onto the daily time frame, you have price tapping into that resistance level that we had marked off from the monthly. So a lot of consolidation and then a massive sell-off. We came back up here and we have been consolidating here for a lot of weeks, basically. So since January 23rd, so almost the entire month, we have been consolidating up top here. Last week, we got enough momentum to come back down and push below these areas, finally break that support area that we have marked up here. And then today, again, pushing back up bullish. So before looking for any continued trades or anything like that, this is kind of the range that we're trading in until price can break past this 43,816 mark. That's the range that we have. That's that previous support where price kept tapping into, grab that liquidity, and then kept pushing back up. How do you know that's liquidity? Anytime price rejected that level, there's a ton of volume to the upside. And you see that from the candle bodies as well. We finally broke below that. We haven't retested that area here whatsoever, as you can see on the daily time frame, even on the weekly. So we need to wait for some sort of a retest and then a continuation down if we're going to look for those continued sells. Buy opportunities also make sense here if price can keep breaking its own top wick rejection here. So you have potential, this entire range that you can look for a buy opportunity, and kind of understanding that this could be the limitation of your trade. It can push back a little bit higher if it needs deeper corrective moves. But again, all this is going to be driven by fundamentals. You drop down to the 4-hour time frame, and you see that after price started rejecting into this, a ton of volume to the upside. We had a quick little retest here before that massive sell-off that happened on Friday during London session, and then it carried into New York session. And we closed out here with very little bearish volume on Friday. And today we started to push back up. You already have a 4-hour candle closure. This new 4-hour candle is forming again. So if you look for buy opportunities, you want to wait for that high here to be broken and then a continuation to the upside. Those are potential trades that you can take. If not, you're waiting for a break and retest of this area, but you can still scalp this entire move back down. The way that you're going to do that is based off the 4-hour time frame. You're going to mark off the zone that price is kind of respecting at the moment. So you have this entire area. So if price can respect this as a new support and then push back up, then you have those buy opportunities to the upside. You can confirm that on the 1-hour time frame and the 30-minute, depending on whatever session that you're trading. If you're looking for sell opportunities, same thing, you're waiting for a break and retest and a continuation down, or some form of market collecting orders here prior to a push back down to come back and fill that gap here. Then we go to GJ. Same thing, we're gonna start off with the monthly. So on the monthly, we had a nice run up here. We have price respecting these areas, previous resistance areas, with a ton of consolidation. So this month, instead of marking off that level, I'm going to mark off the current top wick rejection of this month, which is cutting right through that consolidation area, that liquidity area. And then if you look to the left, right into that previous high before pretty much Brexit was announced back in 2015 and those conversations were started. So this is more of that 193.4. You can adjust that level as you drop down to the lower timeframes as well. And then you have that bottom wick rejection on this monthly candle, which is sitting right on that consolidation resistance, a ton of volume to the upside. And same thing here, you saw a lot of volume when price started to drop back down below that. So this is our range at the moment when we're looking for our trades this month, this week, and we need price to break past these levels before we look for any continued trade opportunities. When you come onto the weekly time frame, another level that kind of stands out is going to be right into the support area. And if you look to the left, same thing, price has rejected this multiple times before a push back up. You have a break and retest right above it and then a push back up. This little quick liquidity grab and then once again push back up. So this is going to be another important level of potentially 190. And if price can respect that and continue pushing down, then you have those sell opportunities. Like last week, we broke below that finally. And then this week, it seems like we're trying to push back up. So you still have a range of about 60 pips or so that you can take advantage of going into the next few sessions. And if price rejects that, then you have that sell opportunity to come back down and at least tap into the previous bottom wick rejection here and then continue into 187.1. You come onto the daily. Friday, massive top wick rejection, also broke the lows, but came back down and closed with pretty good bearish volume. And then today, it had a bit of a gap down here and then finally started pushing back up. So again, you still have some opportunities here, but be more careful around that 190 area. When we come on to the 4-hour time frame, we start to see a little bit of more slowdown in the volume before a pullback, which seems like price is simply making those lower highs and lower lows. So again, can price come back and tap into this area, get close as possible into this area, basically continue making those lower highs and then that sell off to the downside. You can come onto the hourly and same thing here. So you can mark off these levels too, anywhere around here. And if price can continue breaking past that, then you have your trade opportunity to the upside for almost 44 pips or so. Last hourly candle closed with a nice top wick rejection right into that area. The new one started forming, no bottom wicks on the current two or even the last one here, as you can see. So if price continues that bullish momentum, you want that high to be broken, and that's your trade opportunity to the upside. Or if price rejects this, then you're looking for these lows here to be broken, and then you have those sells to come back down. You have UJ. So we're still sitting in those all-time high levels. We're starting to break these previous monthly lows. So we're starting to see some more sellers pressure here, setting up at 149.7. If price can keep breaking below that, then we're looking and we're going to identify those levels on lower time frames. What are going to be potential TP areas here as well. But one thing that you want to be careful of is if price can't break that previous bottom wick rejection, very high chance that it just taps into it and then we just kind of hang around this area until we get more fundamentals coming out. You come onto the weekly time frame. Last week we closed below that area. This week we're trying to see if we're simply making a top wick and if we can break the previous bottom wick rejection and then continue pushing down from there. So that would be something else that you're going to keep in mind. Coming onto the daily time frame, Friday, we closed right below that area. Nice top wick rejection, but very little bearish volume to the downside. So this is where I'm going to start creating my zone, and I want price to clear all of this before I'm looking for a sell opportunity. So I want this daily to be flipping back down bearish, break its own low, and then continue pushing down. That way you have a trade opportunity of starting with almost 60 pips, coming down to almost 100 pips, and then a continuation down for almost 200 pips to fill in that wick right here at the bare minimum. So if I mark off that bottom wick rejection, we see how it sits nicely on this consolidation resistance and that resistance as well. So that's your range that you're looking for any continued sell opportunities. Let's say if price does not have enough bearish pressure and this daily candle flips back up, then you have that clean volume here that you can mimic to the upside, and you're looking for buy opportunities right above this level to come up for about 89 to 90 pips, and then a continuation back up right into that resistance area or that support area right here, which potentially price might respect as resistance for about 168 pips. So either way, you have a pretty good range that you can trade. It's just a matter of waiting for that volume. So over here, we're not seeing a lot of volume even on the 4-hour time frame. Come on to EJ. So you look at the monthly time frame. You have that bottom wick rejection, which is sitting right into that support area that price has tapped into several times here already. 155.8. I'm not going to mark off the resistance here just yet. I'm going to mark that off on some of the lower time frames. What I do see here on the weekly time frame is we're coming right into this core consolidation area, right? So that is 158.7. And price was kind of hanging around here the last couple of weeks. You come onto the daily time frame, and then last week you had that entire seller's pressure to the downside. And then on Friday we closed with rejecting right into that support. Today we started pushing back up. So now if I'm going to look for any buy opportunities, I want price to continue above this entire area, break its own daily high, that top wick rejection, and then you have that buy opportunity to the upside to come back and pretty much correct this entire seller's pressure that has happened. You come onto the 4-hour time frame, nice rejection right here on Friday. We push back up, we close out with price pretty much tapping into this area, the last 4-hour candle. This new one just started forming as well. And then same thing, it made a top wick, kind of rejected that, no bottom wick here just yet. So you want price to break its own high, and then you have that buy opportunity to the upside. For any sells, you wait for this zone to be rejected, and then you have your sells coming back down. So either way, you have good ranges, you have good potential. It's just waiting for your trades to set up here. Finally, we have gold. So we start looking at gold, already making a bottom wick rejection right into this area of 2921.6. You have a range coming into the previous top wick rejection, and then we're expecting that gold is going to keep pushing. I'm expecting that ultimately it's going to come close to that 3,000 mark and kind of reject off of that before we might see some corrective moves happening there too. So that 29.55 mark. But as of right now, we're looking for price to keep pushing back up. You start to see that the volume is starting to die down. So even on the daily time frame, you're starting to see that slowdown happening here as the candle bodies are getting smaller and smaller and smaller. You come onto the 4-hour time frame, you start to see a lot more consolidation. So for that continued buy opportunity to the upside, we want to see price respecting this area and keep breaking past that consolidation to the upside, and you have your buy opportunity into 29.55. If price rejects that, you're pretty much following whatever price has been doing previously on the 4-hour time frame, where you're looking for a sell to come right back down into the support of 2921.6. You come onto the hourly, it's last hourly candle, massive push up right when the market pretty much opened up a couple of hours ago. And then you have the new hourly candle that broke the previous highs, but we're rejecting that and pulling back down. So once again, you wait for that high to be broken here, you test that volume to the upside, and you have your buy opportunities to the upside, or you're looking for sells below this area. Again, you wait for that rejection and continuation down. So that's it for this week's weekly outlook. If you guys have any questions, as always, feel free to comment below or reach out to me on Instagram at SharmaFX. And I will see you guys on Friday for our US30 account growth simulation session. I hope you guys have a great rest of the week. Make sure you're not over trading, over risking, doing anything pretty much to blow your account. Practice proper risk management.